Welcome everyone. In this session, we are going to learn about a very important candlestick pattern which is known as morning star. Morning star pattern is basically formed at the end of downtrend. It represents the trend reversal. So, what is the psychology behind morning star candlestick pattern? Let's see. The psychology behind morning star candlestick pattern is as you can see in the picture, market is going downwards and then a big red candle formed, and instead of continuing falling with big red candles, what happened, a doji or spinning top, this is a spinning top, a doji or spinning top, any of these two candles might be there, a doji or a spinning top, and just after that the next candle failed to close below this doji and spinning top, and the green candle is formed. I repeat, market was going downtrend, a big red candle formed, followed by a doji or a spinning top, and after that a green candle formed which failed to go below or close below this doji or spinning top. So this is what a morning star pattern is. And what was the psychology behind this pattern is? Psychology behind this pattern is, since the market was falling from a long time, what happened, one big fall or one big sell-off came, and then the bears lost their control. Bear lost control because since the market was continuously falling, all the selling positions were completed, and then a small consolidation took place. That is a tug between bulls and bears, and finally bulls dominated. Since from last few candles some bears were overpowered, now they were become weak and the bulls took the charge. So this is what the psychology behind morning star candlestick pattern is. Let's look into the chart and understand it more clearly. Nifty 50 15 minutes time frame, market was falling, then again it rise up, and then again it fell, and what happened, a big red candle which shows bearishness, big red candle, followed by a doji type candle, followed by a green bullish candle. So market was in a downtrend, price rise little bit up, then again it started falling, big red candle formed, followed by a doji where it was a tug between buyers and seller, or we can say bulls and bears, and finally bulls overpowered, which is being shown by this green candle. Now what we have to do whenever we spot this type of pattern is, we have to enter at the close or at the high of this candle. Our entry will be the high of this candle, stop loss will be the doji, low of doji, or the low of entry candle, whichever is low, doji or entry candle. This will be our stop loss, whichever is low. As we can see here, low is this entry candle low, so our stop loss will be somewhere here, If this much is our risk, our reward will be 1 is to 1.5. So our target would have been achieved somewhere in this candle or in the next candle. This is how we trade morning star pattern. For morning star pattern, previous downtrend is must. So let's see the criteria for considering any candle as a morning star is: first, previous downtrend. Previous downtrend. Second, big red candle followed by doji or spinning top. Big red candle followed by doji or spinning top. Third, green bearish candle. Sorry, green bullish candle. Green bullish candle. If these three criteria are met, then we can consider it as a morning star. Morning star pattern. So this is the three golden criteria for considering any candlestick pattern as a morning star pattern. Let me show you one more thing. Since this was a morning star candlestick pattern, can you spot any other candlestick pattern in this chart? Are you able to spot any other candlestick patterns in this chart? Don't worry, I will tell you. See, market was in a downtrend. What happened? A red candle formed, then a green candle which engulfs the previous red candle. See, this is the high, this is the low, this is the high, this is the low. Red candle is completely engulfed. So which pattern is this? Bullish engulfing pattern. Our golden criteria is meeting or not? Let's see. Previous downtrend, yes. Small red candle, yes. Followed by big green candle which engulfs the previous red candle. All three golden criteria are fulfilling. So we would have taken our first trade here itself. We would have entered over here, keeping our entry here. The stop loss would have been somewhere here. If this much is our risk, our reward will be 1.5. Somewhere here, we would have achieved our 1 is to 1.5 risk reward ratio. So this is how you have to analyze the chart. You have to find patterns within the patterns. One more, apart from this and apart from this morning star, are you able to spot some more trading opportunities? Suppose you missed this morning star pattern. You missed this morning star pattern. So is there any other opportunity apart from this and morning star pattern in this same chart? Is there any other trading opportunity apart from this pattern and this pattern in the same chart? Don't worry, I will tell you. See, market is in a downtrend. Small bodied red candle engulfed by green candle. What does it means? This is a bullish engulfing pattern. This is a bullish engulfing pattern. Can you see it? This is the high, this is the low, this is the high, this is the low. This candle is being completely engulfed by this green candle. So if you might have missed the morning star pattern, you should have recognized this bullish engulfing pattern. So what you have done over here, you should have entered over here, your stop loss somewhere here. If this much is your risk, 1.5 times will be your reward. Somewhere here you would have achieved your target. So you would have achieved 1 is to 1.5. This is how you have to analyze the patterns. This is how you have to see the patterns within the pattern, which means a bullish engulfing pattern inside the morning star pattern. This type of formation is called PWP formation, that is pattern within pattern, which means one or more pattern is being spotted within a single pattern. So this is how you have to trade morning star strategy. Let's see some more examples. Nifty 50 index 15 minutes time frame. What happened? Market was in uptrend, then a small correction, a small downfall, followed by a big red candle, a doji green bullish candle. So our three golden rules have been fulfilled. Three golden rules or criteria is fulfilled. Downtrend followed by big red candle, small doji, green bullish candle. So what our strategy says: entry at the high, stop loss at the low. If this much is a risk, our reward would be somewhere here. Target 1 is to 1.5. This is how we trade. This is how we have to plan our trade. Let's look some more example. See, this is for your eye practice. Can you spot a morning star pattern in this chart? Can you spot a morning star pattern in the chart from here till here? Are you able to spot morning star pattern in the chart? I hope most of you might have found the pattern also. See what happened. Previous downtrend, market was falling. What happened? Red bearish candle, red bearish candle, followed by a hammer pattern, or we can say a doji type pattern. This is not doji, this is a doji type pattern. What I wanted to show you is why I choose this chart, because most of the time people confuse that there may be doji which will look simply like this. But remember, when you are trading against the traders. When you are trading against the traders. You are not trading against the painters. So what I mean to say is, when you are trading against the traders in market, there will be very less chance that you will be getting a perfect doji or a perfect spinning top pattern. Most of the time you will spot a candle like this, which you have to consider doji. If here it's a green and here if here it's a red and here it's a green, then you have to consider this as a doji. If here it's a red candle and suppose this is the candle and here it's a green candle, then still you have to consider this as a doji, because there is no specific criteria or specific rule to consider doji for morning star pattern. Any candle which have wick on either of the side, and it falls in between a big red candle and a green candle, can be considered as a doji for morning star and evening star. We will be discussing about the evening star pattern in the next session. So this is what I wanted to show you. So downtrend followed by a doji type pattern and then a green candle. So what you would have done over here, entry at the high, this is our entry, this is our stop loss. If this much is our risk, our reward would be somewhere here. In the same immediate candle, you would have achieved your target. This is what Morningstar strategy is. This is how you have to trade Morningstar pattern. Never wait for perfect doji, because nothing is perfect in the stock market. Nothing is perfect in the stock market. Always remember, because paintings and books are different and the real live market is different. Sometimes you have to consider even this type of pattern also as a hammer with a small wick at the head. You have to consider this type of pattern at the hammer. But what you have to do for considering these patterns is you have to check the previous history, which means what trend is it, which candle formed before that candle, and what type of candle forms after that candle, which means you have to analyze the past, present and future for deciding the pattern. And this, you will get perfection in this thing by practicing. That is why I say do lot of practice, do lot of back testing, and then definitely you will be able to spot on this type of things. Here we have example of Reliance Industries Limited 15 minutes time frame. Here, are you able to spot a morning star pattern in this chart? Are you able to spot a morning star pattern in the chart? I hope most of you might have spotted also. Let me tell you. See, clear downtrend. What happened? Bearish red candle, bearish red candle followed by a hammer, or we can say doji type. Why we are considering this as doji type? Because the next candle is green. So for making a morning star, we have to consider this as a doji. And as you can see, on collaborating these three patterns, this becomes a morning star pattern. Bearish red candle, doji type pattern, not doji, doji type, and this green candle, bullish candle. So what you have to do over here is entry at the close or at the high, whichever seems perfect to you, but I basically prefers entry at the closing. So entry would be somewhere here, the stop loss would be somewhere here, giving some buffer. If this is our stop loss, then this would be our target 1.5, and you would have achieved your target over here. So your risk reward of 1 is to 1.5 is being fulfilled. This is how you have to trade. This is how you have to plan your trade. This is how you have to consider morning star pattern. Axis Bank Limited 15 minutes time frame. Can you able to spot a morning star pattern in this chart? Most of you might have spotted it also. Let me tell you. see a downtrend, big red candle, big red candle, a doji type pattern, doji type, green bullish candle. So a downtrend market followed by a big red candle, followed by a doji type candle, again followed by a green bullish candle. So what happens, a morning star pattern is being confirmed over here. So what you have to do is act according to your plan, act according to your strategy. You will enter over here, keep your stop loss somewhere here. If this much is your risk, your reward would have been this much, and your target would have been achieved somewhere here, 1.5 times. 1 is to 1.5 times. This is your risk to reward ratio. I hope you might have got the clarity about morning star pattern. I hope now you have understood how we trade morning star pattern, how we consider a pattern as a morning star. This was all about a morning star pattern. Let's see one more example. Tata Consultancy Services Limited, 15 minutes time frame. Now, as you have seen lots of examples, now are you able to spot a morning star pattern in this chart? A morning star pattern in this chart. Can you able to spot a morning star pattern in this chart? See, downtrending market, big red candle followed by a small hammer, small shooting star type pattern, reverse hammer, which we will consider as a doji, followed by a green candle. On integrating these three patterns, we can say this is a morning star pattern. And then what we have to do is entry at the high or close, whichever you feel suitable. Stop loss somewhere here. If this much is your risk, your reward would have been somewhat this. You would have achieved your target over here. This is how you have to analyze the patterns. This is how you have to treat candlestick pattern and trade. So this was all about the morning star candlestick pattern. I hope you might have understood the complete psychology behind the morning star pattern, trading strategy for morning star pattern, what are the criteria for considering a pattern as a morning star, finding PWP, that is pattern within pattern, and trading accordingly. So these are all about the candlestick trading strategy for morning star pattern. So in this session we are done with the morning star candlestick pattern. We will be looking into the evening star candlestick pattern in our next session. So till then, do lots of backtest, do practice, and all the best for your trading career. See you soon in our next session.